Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap. This is our pre-market session where we set up our trade plan for the day. We take a look at the macro to the micro, drill down, determine where our trade levels are going to be, our targets, and our hypotheses for the day. My name is Doug McKay. I am the founder of Quantum Leap. If you want to get more information about this room, it is a private group of traders. It is a live chat room and a live trade room. Send me an email at quantumleapfutures@gmail.com or just give me a call, 647-545-8065. We do not have a website. This is not a commercial venture, so come join us. All right, before we get going, got to do the disclaimer. All those legal things. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You are responsible for the trades or investment decisions made. Trading futures are an instrument that follows the risk loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more in an initial investment. Nobody at Quantum Leap is a certified trading advisor. Past performance is not indicative of future results, and any trades that you see in here are for education purposes. Please trade your own plan and your own due diligence. Okay, so yesterday, Fed Day, yay! Took a lot of, yesterday my motto was to take a lot of swings, control my risk, and just loosen up a bit. I've been trading pretty tight as of late. I think it's because I'm so careful, knowing that some of you are following along in my trades and have tighter risk metrics. And so I've really tightened up and missed a lot of trades that I should have taken or I would have taken normally. So yesterday I just, wrote at the very top of my journal, take the trade if you see it, and just control your risk. So I took a whole bunch of trades. I took actually 11 trades, during the course of this chop here. And, just controlled the risk, just started building some Theo. And then, of course, I took a break, and then we came back for the Fed trade. Now, I was going to do the Fed Ferrari trade, but I was waiting. I only wanted to do the Fed Ferrari if we were in balance around this 85, and I had a upside target, the upper wing at 97.25 and the lower wing at 74.50. Of course, because it didn't come into balance, we actually came into the Fed. The Fed number I have is 1991. That is the 2 o'clock number. And so I didn't take the Fed, but I did take I did trade it. I just waited for the wiggle and then came down and took my first trade at 87. And I took a whole bunch of longs with the same attitude, whereas I was going to take swings at it, try to get funded, and try to catch the run, because once they announced that they weren't going to raise rates, I was pretty sure we were going to dip into the 2000s. The reason I believed that is because of the September contract, and I was talking about this before. I even brought it up and showed it on my screen. Is the September contract prior to the Fed had gone into the 2000s. So if the news was good, I figured we were going to get a move into 2000 and most likely into that rule of 10 and to that main target at 1150. And so I kept on taking a whole bunch of swings and getting stopped out for small profit or for small loss. I think I took, 15 trades. But anyway, the point was I was trying to, every single one of them was to the long side, and I was simply trying to control my risk and get into a position and lay off that risk and get the free runner for the run into the 2000s. And I actually, the one that went for me is I got, the last one I took was long from 93.25, and I took that. Unfortunately, I got a little bit shaken out at 03.50. I closed it out at 03.50, got up to 05, and they came back. And I didn't want it to come all the way back to me, because I figured we'd probably return to the scene of the crime. So I didn't catch this last move, and it did go one tick above our main target, above which was at the 1150. Then this was a FUBAR Mr. Sneaky reversal. Okay, and I didn't take it because I was done trading by that time. But this was a beautiful setup. I wish I would have stayed in it, and you would have got short on either this bar or this bar right here, and you could have had a nice move down. Of course, overnight I caught some of the move down. I got short once we got below the VWAP again for a run into that 69 we were talking about. Marvin and I were talking about it last night in the chat room. Anyway, we closed at 1975 and a quarter. Our range for the day was put in the RTH at 39.72, so still pretty big range, and it was probably the best Fed day in terms of movement that we've had in quite some time. So it was good. The only problem is the Fed trade or the Ferrari trade only works properly if we're in balance, because the whole theory behind that trade is to break out of that balance, go into imbalance on one side, return back to balance, and test the balance below. And it's a double wing trade, kind of a bracket trade, that the wings are actually exits. And I'm using a pivot. My pivot yesterday was going to be 85. Anyway, didn't get to do it, but we'll next Fed hopefully we'll have the same type of action, and they'll come into it with a little bit more balance. Anyway, I digress. News for the day. We had Canadian CPI basically came out as expected, nothing new. And then the only thing we have today is the CB leading index at 10 Eastern. So not a lot of big news day. Overnight, they fell off, and they fell out of this balance they were trying to find in around that 78.50, and then they rotated down, and we just came down and hit 53. 1953 is our week open, so we're testing the week open. 1957.50 is the December contract month open, and 1965.50 is the September contract open. Mark those three things in your journal this morning because they're going to be important. Okay, so let's start with our regular routine. I always like to start with a macro to micro view on where we are within the trends and the different time frames. I start with a monthly simple candlestick chart with a 9 EMA and a 20 SMA. Great trend on the monthly. Finally came down last night, challenged the trend, and now we're trading below the 9 and the 20 right now. Is there something I should be reading in the room, because I keep hearing things typed? I can't watch and do this at the same time. So the trend has been challenged on the monthly. We're currently trading below the 9 and the 20, so right now we don't really have any trend on the monthly. On the weekly, well, we talked about this FUBAR Tech Gap Mr. Sneaky and it being closed, and I said it would likely get closed in around that 2000 area, 2002 I think I was talking about yesterday. It got closed, and we've rejected it so far and come right back down. So just like the daily, the trend is still down after rejecting. So we do have slope and separation to the downside on the weekly, so the trend is still down coming into the weekly. On the daily, we had that same pattern, Tech Gap, Mr. Sneaky, FUBAR, and came up, closed the gap, was rejecting the 9, and then they broke above and they came up. Remember yesterday that I said we had this naked cross here at 54 and a quarter? Well, they come down and closed it out. Keep an eye on those naked crosses. They will always be closed out. So more consolidation rather than anything else on the daily. Going to the intraday, 4 hour, we've had started a trend up, and then we've in the last 4 hours broken below it and come back down. So we've challenged the trend to the upside on the 4 hour. Going to the 1 hour, Trend is definitely down. We've got good slope and separation. We do have a possible tech gap FUBAR Mr. Sneaky setting up here, so just keep an eye on the next half hour. I'm sorry, the next hour, and whether or not we get the FUBAR formed and then possible Mr. Sneaky. But we definitely have a tech gap. But the trend is down. On the 1 hour, we have a naked cross now above us at 1985. On the 30-minute, again, same picture. We have a downward slope. We have a naked cross above us. This move up and then sharp move down created a whole bunch of naked crosses above us now. Not many naked crosses below us. Then on the 15-minute, same thing, slope and separation to the downside. And then on the 5-minute, we've got this trend, but the trend is being challenged right now. We broke back above the 9 and the 20, but we broke right back below, and we're coming down to challenge the 9. But we've we lost slope and separation. So overall, the mood coming into this market is a downward trend, which is now being challenged on the most shortest time frame. Taking a look at the big picture. I apologize. I'm still struggling with whatever I've got going on here. Okay, in the big picture, we have is gold. I don't. Why is? Oh, you know what? Changed my chart. Let me just change this back. Sorry. All right. I'll have to do a data download, but I'll be good. This is a big enough time frame. So we've been trading in this balance area from the gap down, from the second significant breakout candle, and down to that 1821.75 on the December contract. We've had this balance area and the value area of the micro composite with the value area high, which is now shifted to 78.50 down to that 1906.75, and we had broken out of it. It was 76.75 as of yesterday. I'm sorry, 2 days ago. We had broken out of it, and we were trying to hold value here at that 85. That's why last night I was saying if we broke back above the 76.75, well, we'd likely move up back into that 85. We got as high as 83, and they failed and put a little bit of a head and shoulder pattern in, and then they came down. And the target was 69.75 with continuation if they couldn't find buyers there down into the 58, 59, and they actually came back down a little bit lower. But the key point here is we're back inside of the value area of this balance that we've been in, and we're coming down. Key line in the sand for us is still going to be this 48.75, because we get below 48.75, then we got a nice trade back into balance down here into this 43.75. Currently, right now, we're fighting the month open at coming up to fight the month open at 57.50. We're trading 56 right now. 53 is our week open, and the September is 1965.50 for the month open. So be interesting today whether or not we close on a positive week or a negative week. And I think 48.75, if we get below that, we're going to end up with a bearish week this week. If we can hold the 53, I think we'll rotate back up and we'll probably come in to around this 1970, possibly the 78, 79 level. But right now, the most accepted price in this distribution area is 60. So if we could hold 53, I'd be looking for a move up. You might get a little bit of resistance here at the 57.25, which is the 6-day microcomposite VPOC before we gapped up and tried to break out of this value area and try to hold value up here at 85. Key line in the sand, I'm going to do a data download and think it's still at 76, 75, but it might have shifted slightly up to 78.50. But I have to do a data download because this chart got screwed up. So we'll check on that in just a few minutes when I get through some of this other stuff. I've been a little bit long-winded the last couple of days, so I'm trying to keep these things shorter. So overnight we had a high of 83. We talked about this move down to 69 and then 58, 59 area. Our value area, or VPOC overnight, is at 57.75. So it shifted down in the last little bit down to that level we were talking about last night. So VPOC overnight is 57.75. So we'll put that in. Wow, all my buttons lost their color. I got something weird going on. So our overnight VPOC is 57.75. Our overnight high right now is 83. Come on. Right at yesterday's open. And then our overnight low is 53.25, but we still have time right now to make a lower low. But I'll put it in as 53.25. I'm anticipating that we're going to come down and test this 48.75. And if we get below 48.75, then I'm looking for a move down. We'll talk about that in just a minute. Right now, it's very, very toothy on the overnight, and we've left this big area of unauctioned territory, which starts above the 65.75. So from 65.75 up through to basically the range low, we've got this unauctioned, low volume area with the VWAP in around 68. So I'm going to be targeting 68 from below with a breakout above 65. Howard, you said you figured out how to fix this. Let's talk about that when I'm done this morning. It's driving me nuts. And then below, then we've also got an LVN here at 61.50. So I'll be watching that area as well. But really, it's 65.75 to me. Other than that, there's no real information that I need right now. We got a double bottom here at 53.25. If you're trading right now, if we break this 53.25, I would be looking to go down and test this 48.75. I don't think that this 53.25 is going to hold. So we'll have to keep moving our overnight low down. So let's talk about the lower numbers because we're likely to come down here and test them. So we don't need the overnight anymore. And we'll bring up the composite. So below the 48.75, the 6-day microcomposite VPOC, or the most traded price last week and beginning of this week, was that 43.25. So 43.25 is still a naked VPOC. It's still a naked microcomposite VPOC, and it is our main target below the 48.75. And if we don't hold this 48.75, this will actually be a pretty nice trade because I think we'll move down here. And then we've got the 41 1/4, 41 and a half is a naked VPOC or naked cross on the 15 minutes. So I'm going to adjust this up slightly. And then just below it, we've got this CLVN here at 40.50. So I'm going to move this trade area, whoops. I'm going to move this trade area up to 40.50. Because if we come down here, we don't find buyers between 43 and 41.50 and rotate back up to challenge that 48.75. Then if we break the 40.50, then I'm looking for the bigger move down into this 31.27 area. The ATR target, our 20-day ATR is running at 51.33. Our high overnight is 1983. So a move down to our ATR target actually takes us down to 31.75. So I really think if we can't hold this 40 area, we're likely to come down to this 31. I'm going to take this right out at 37. It is taken out. And then below that, we've got the 28.75 and 29.50. 28.75 is the microcomposite value area low. Look at, we're already coming down into that 49. So if you're trading that break below the double bottom, I hope somebody took that. And we've got the CLVN at 29.50. So between 28.50 and 29.50, we've got this trade area, and then below that we've got a target at 27.75. And I know it's tight. And then this should be a trade area at 25. Trade areas are targets and entry points. And then below that, our main area, our next big destination is down here in the 1923 to 1921.75 area. There's a lot down here. And then below that, we've got another target at 1875. And then if we break this 1750, it's all going to be about this 1912 and whether or not we hold the key line in the sand. It's 0675. It was 07 1/4 yesterday. I'm going to put it at 0675. I still have to do a data download to make sure that this chart is correct for myself. And then below that, we get below the 0675. I think we're going to dip in and test the 1800s again. And we have all those same targets that we've been talking about below us. If we hold the 48.75, look for a rotation back up through to the overnight VPOC at 57.75. I got to take this out because we're making new lows right now, and I don't know where the low is going to be put in. And then a move up to test the 61 and 65. Anything above 65, look for the move up into this 68, 69, 75 area and a challenge to the range low. If we get into the range, your main target inside a range is going to be the naked close at 75 1/4. And then a move up to test the value area low at 79.50, where that was a key area of price acceptance. It is now our value area low from Fed Day. And then above that, we've got the overnight high at 83, and then the 85 is the next big destination inside of value from the prior day, but outside of value and into price discovery from the longer term value area. And then above that, there really isn't anything until we come into the 88, but I'm going to be watching the VWAP here at 88.75. Because above that, I'm looking for a move to the midpoint at 92 and continuation for the 80% destination trade, the value area trade up into this 95. And then anything above 95, we get into this thin area again. And I think that you got to target 99.50. And then above 99.50, that 02, actually I'm going to move it to 02, I mean, sorry, 04 and a quarter. And then the 08, 09.75. And above that, we should go and break this top at 11.75 and take out this naked close up here at 15. And then all our upper targets all come into play yet again to the upside. But I'm looking for a rotational day with the key line being the 48.75. If we hold it, I think we get a rotational day with a Friday afternoon drift up into that 1970 area, possibly even the 85. But if we break the 48, then I'm looking for a move down to 43 to find buyers. If they don't find buyers and they don't hold the 40-50 CLVN, then I'm looking for a slow sell-off into the weekend down into this 31 area, and possibly even into this 21, 23 area. That's what I'm looking at in the ES. I'm going to do a data download, but I'm going to wait until I go through gold. Let me just do a quick look at the Keltner. Keltner right now, we've got a Keltner lower line walk set up. This is where we test below the Keltner, pop back up, give us a single wrinkle reversal, then close below. So if we can't hold this 48.75, look for a Keltner line walk down into 43. You are coming into the RTH close, or the open. If we get the double wrinkle reversal here, then I think we're going to get a move up into that overnight VPOC at 57.75. In gold, yesterday I took a trade at 11:15.80, got funded, and I got stopped out. I was talking about this yesterday morning where I wanted to be long gold with some Theo built and some breathing room, because I believed that I've seen it many times that we usually get a nice lift off in gold on the Fed number, especially if they didn't raise rates, which even if they did raise rates, I think we would have got the lift off. Anyway, we're now trading up here. We've broken out of this balance. We're challenging, above the value area of this balance that we were in right here. I'm expecting continuation on gold to test this 43.10. And if we can break above that, then I'd be looking for the next big move up into this 54, 55 area. But if we don't break above 43, then I think we get a rotation back towards this 29. I'm looking hopefully to start looking to take another position in it down here in the 22.30. I missed the run. I got in, I got funded, and then I got stopped out for a profit, but I didn't get to hold it. So I missed this whole 30-point move, and I'm not happy about it, but it happens. Anyway, below 22.30, if they don't hold, then I think we're going to get a bigger move back down here into this 11.06. Remember, I'm still looking for gold to come up to this 1240 area. That is the most traded price going all the way back to 2008. And my anticipation this year was a slow drift back up towards that 1240. I don't know if we're going to make it this year, but we are going to come back up into this 1200. It's only if we break 1100 that I'm worried about having to come down lower. And of course, my first destination lower is going to be this 1091.40. So that's what I'm looking at. As always, trade well, trade safe, and we'll catch you on the flip side. Look, we're getting a Keltner lower line walk. Geez, I wish I was trading this. Oh well, that's why we charge for the room, because it takes away good trading opportunities for me. Anyway, everybody have a great day, and I'm going to take a break and come back for the open. Trade well, trade safe. Catch you.